morning. Thank God it's Friday. Well, I hope this week has been well spent. Anyways, we still have a final chance. So let's make the most of it here on Business Morning. I'm Ini John Mekwa. We start off with oil prices as usual. We see that prices rose on Friday on worries over tightening supply, with the market looking ahead to the International Energy Agency's monthly report, which is supposed to be out later on today, to clarify the global demand outlook. Brent crude futures climbed 36 cents to $86.45 a barrel, while U.S. Texas Intermediate crude futures also went up 43 cents to $82.59 a barrel. Both benchmarks fell more than 1% in the previous session. Russian exports are showing signs of weakening as production is reported to have been curtailed by 700,000 barrels per day. Meanwhile, investors are also focused on the IEA's monthly oil market reports, which should be released later on today, Friday. The possibility that the agency might downgrade the global demand outlook over faltering macroeconomic growth is helping to cap prices. A report from the Organization of Petroleum Exporting Countries released yesterday, Thursday, pointed to downside risks in summer demand, citing a weaker growth bank backdrop, tighter monetary policy, and instability in the global financial sector. Commodities now. Chicago wheat futures slid on Friday with ample world supplies weighing on prices, although losses were limited after Russia raised fresh doubts over the extension of a Black Sea deal to allow Ukrainian exports. Soybeans were little change amid concerns over severe droughts cutting output in top supplier Argentina. Currently, Russia is indicating that there will be no extension to the UN-brokered Black Sea grain deal past the 18th of May, unless the West removes a series of obstacles to the export of Russian grain and fertilizers. Commodities Research also said this in a report that the most active wheat contract on the Chicago Board of Trade lost 0.4% to $6.64 for a quarter of a bushel. Soybeans went down a quarter of a cent to $15 for 3/4 of a bushel, while corn gave up 0.1% of its price to close at $6.52 for 3/4 of a bushel. From today, Friday, April the 24th of 2023, shareholders of Dangote Cement PLC will begin getting their dividend for the year ended December 31st, 2022. This is according to the chairman of the company, Alhaji Aliko Dangote. He was speaking at the 14th annual general meeting of Dangote Cement PLC, which was held in Lagos yesterday.
The 14th annual general meeting of the Dangote Cement PLC is to do an appraisal of the company for the year ended December 31st, 2022.
Really, it gives me great pleasure.
Shareholders come together here in Lagos, while others join virtually from different parts of the world. Chairman of the Board of Directors of the company, Alhaji Aliko Dangote, is here alongside other members of the board.
Agenda items to be deliberated on today.
In addition to the customary declaration of dividends, this meeting is to also elect and re-elect members of the directors and shareholders' representatives, among other agenda.
Regulators present, distinguished fellow shareholders.
It also avails shareholders the opportunity to contribute to the growth of the company.
I say you have done well.
The chairman responds to some of the questions before declaring the dividend of 20 naira per share, having achieved a profit after tax of 382.3 billion naira, which is about 4.9% increase compared to the previous year.
Following the results of the voting as announced by the registrar, I hereby declare that the resolution to declare a dividend of 20 naira per share, irrespective of the period ended 31st December 2022, has been passed.
Shareholders are impressed with the dividend and generally by the performance of the company in the year under review.
We are getting a very good dividend of 20 naira. Of course, we can look at it that we received the same last year, but when you look at it with the situation of things in the country, we are very happy.
I'm highly impressed because they are expanding into many African countries, and that is why you are seeing the profitability you are seeing.
Well, we have actually done quite a lot. Yes, it's true. Our own bonds, yes, we did extremely very well. There's quite a lot of trust, and people like and love our brand. And I think we're doing great, and we'll continue to make sure that we keep the shareholders happy. Not only the shareholder, all stakeholders.
They also commend the leadership style of Alhaji Aliko Dangote, which they credit for the strides the company is making.
Well, from there we move to a not-so-good story. We did see that 2 days ago, a 7-story building collapsed in Banana Island in Lagos. And from there we've heard that the Lagos state government is looking to do a stress test on buildings on that Banana Island. This is not the first, and well, obviously something needs to be done. But with trillions lost to failed and collapsed buildings, stakeholders talking about road to recovery. Lagos State accounts for 60% of reported cases of those collapse in the country. In 2022, it was stated that Lagos lost 66.37 billion naira to collapsed building in 24 months. There was a record of 20 cases and 90 deaths in 9 months. One of those who carried out that test, and I've been speaking about it, is the pioneer president of Building Collapse Prevention Guild, Mr. Kunle Awobodu, joins us from our Abuja studio to elaborate on this. Mr. Awobodu, good morning. Thank you so much for your time this morning. Once again, we have to have this conversation just when you would think that Nigeria has grown past it. And, you know, the surprising thing is for a second time now, we're seeing it happening in Banana Island, which is supposed to be a highbrow area. They are not supposed to be cutting corners. What's going on? I mean, you are in the guild of preventing collapsed building.
Yeah, good morning, viewers. It's not a happy time for us, especially those of us in the built environment who have been promoting standard construction over the years. It's more or less like an outcome of general malaise in the country. Well, after the collapse of stock business in Nigeria, a lot of investors diverted attention or focused attention in real estate business, where you could gain a lot of valuable returns after investment. So that is why the real estate business and building construction should be a business that we cannot actually joke with. And what happened in Banana Island, which is regarded as the paradise of billionaires, is unfortunate and unacceptable. First, the developer must be an investor, either bank loan or people's contributions are directly involved. By this April in 2021, a building was pulled down at Parkview Estate in Ikoyi. It was constructed by certain developer and was pulled down by Lagos State government on infractions. So this particular building that collapsed on Banana Island, such a developer must have learned from the loss in investment of the one that collapsed also in April, or not collapsed, pulled down in April in 2021. So naturally, developers who are somehow careless will suffer a lot of losses in investment. So no serious developer would like to invest on a project that is bound to fail. For instance, a flat, a 3-bedroom flat on a building we inspected on Banana Island recently was going for 15 million naira per annum. So an average developer will be attracted to investment on Banana Island. And the investment is huge. Most cases for high-rise building on that island, which was completed, artificial island, which was completed in year 2000, the piling in that area is at a huge cost. At times, you might be spending about 120,000 naira per meter for 800 diameter piles. And that location is very erratic in nature. So anybody that wants to develop in Banana Island must be cautious of the high cost of development. But one will not be worried because of high returns in investment. So in this case, it is an island that one should not allow a development of substandard construction to take place. And from my own experience too, that island has a very strong association, well-disciplined association. So I wonder why this should have happened on that island.
Yeah, Mr. Ubodu, I mean,
for those of us,
yeah. So I was going to say that, just as you have noted, I mean, Banana Island is for the elites mostly, and investment there is high. Obviously, the returns is also high. So where could the cutting of corners be coming from? Because one would have thought cutting of corners would be coming because people want to reduce cost. But if the individuals, presumably corporate or individuals involved, are elites who should be able to, invest enough to get enough returns, then is it that they're getting quacks? Or is it that those who are supposed to be professionals are now deceiving the investors and using maybe substandard materials?
Yes, when you look at the design or the building, you study the video, you notice the nature of the suspended slabs of the 7-story building. Flat slab, design flat slab, which is not common. So that means that the developer should have engaged some qualified engineers to carry out the design and possibly qualify architects. And that is why it is important to always have project board as recommended by the regulation on every building site, which will reveal the names of the architects, the engineers, and the builders. And they become traceable to the regulatory bodies in the built environment. If they are qualified professionals or they are quacks. So in this case, something has really gone wrong, and there should be a comprehensive investigation, starting from geotechnical analysis of soil investigation and to the finishing or substructure level. Because from what we could observe, ready-mix concrete was being used at the last floor, which is the 7 that makes the number of stories 7. And ready-mix, the cost of ready-mix to that place, maybe grade 30, or let's say minimally grade 25, is about 75,000 naira per cubic meter. And the type of reinforcement bars that will meet standard, the minimum should be TMT. You can't get a ton that will pass standard less than about 500,000 naira. Sans the labor. You have not costed the labor. So, from our little observation, something went wrong. Something really went wrong. Why I'm saying this, I still don't know the connection between the developer that lost heavily at Parkview Estate and the developer of this present one. So, in Newton law, especially second law, we will say work done is equal to force multiplied by distance. For those of us who have been working in the promotion of standard building construction over the years to prevent this frequent collapse of building, we feel a little bit demoralized because our years of work, where we are contributing our own resources, all of us across the semi-built environment, professional bodies, to fight quackery in our industry, we feel a little bit demoralized that from the collapse of 21-story building to the collapse of 7-story building within the same axis, it's difficult to excuse. And it is indictment on all those of us who are professionals in the Nigerian built environment, because the whole world is looking at us, and that is why, rather than withdraw into our chairs, we will need to increase the tempo of our activities. And the Lagos State government should be encouraged now to bring out some kind of punitive measures, because over 552 buildings that have, or about 552 buildings that have collapsed in Nigeria since year 1974. 59.06% happened in Lagos State. And between that time and now, no single person has been successfully prosecuted in a society where there is no consequence. Loss of life and investment becomes a continuum.
All right, Mr. Obodu. So what would you advise investors in the real estate sector to do now? What extra steps can they take? Because as you have outlined, this is a loss. I mean, we do, of course, first of all, prioritize lives involved. And we thank God that in this last one, there was no life involved, even though there are people injured in the hospital. But I mean, what would you ask investors to look out for or to do to protect their investment as they go into this construction? I mean, because it doesn't sound like it's just about providing the funds. It looks like they might have to go a step or two further to be able to protect their investments.
Yes. Number one, some of the developers are very cautious of quality production. You know, when you are trying to economize in certain areas, you might endanger the outcome of your investment. It is very important that they should engage experienced, well-qualified professionals. People should not be coming into our industry, construction industry, thinking or prioritizing pecuniary gains. they should look at the risk involved. So by the time some of the corporates are really punished, are heavily punished, quacks will be scared from that industry. Let me cite a quick example. It's a worrisome state. A few days ago, some videos of piling work across that axis to Lekki were sent to me. That look at what is happening. Eventually, we know that that piling work will fail over the years. That is the common problem in that axis, Lekki axis. Foundation problem is of serious concern to us in that profession, those of us in the profession. Quacks are so many involved in the piling foundation activities in Lagos. So an appeal will be made to the general manager or to the Lagos State Building Control Agency to sanitize the piling industry and subsoil investigation activities. Because that area happened to be the source of preliminary or primary problems in our building industry, then we should keep to the regulations. The current Lagos State Building Control Regulation in Lagos insists that on every building site, there must be a professional builder, for instance, that should manage the building production process. It's not because of the gain, so that somebody will be held liable if production goes astray. So now it is not a business for all commerce, or we say all commerce affairs. There should be discipline in our industry. And most of the past recommendations made by these committees of investigation on building collapse should be made or upgraded to the level of fruition. I have been a member in many of these committees, but we discovered that some of our recommendations are not implemented after many years. So they could bring these recommendations together and examine them appropriately and try to create some kind of unison between policy formulation and implementation to eradicate or wipe out the dichotomy. So sanity will return to our industry. We are seriously pained with this development.
Yeah, well, not just you, but a whole lot of Nigerians who have lost loved ones, who have lost, investments and all of that. Thank you so much. Mr. Kunle Awobodun is the pioneer president of Building Collapse Prevention Guild. Thank you for your time this morning.
Yes. Thank you.
Let's take a break now. After the break, we'll head to the financial services sector, and we'll have some stories from there. Do stay with us. This is Business Morning on Channels Television. Welcome back to watching Business Morning here on Channels Television. The Central Bank has directed banks to transfer balances that have remained in a dormant account register for up to 10 years to the Unclaimed Balance Trust Fund pool. How does the CBN Act treat dormant accounts and unclaimed funds? That's one conversation that is making the rounds in the financial sector. Started yesterday. Also, financial experts are observing that more Nigerian banks will adopt cross-border expansion in the face of tight regulation over concentrated risk and the desire to stay afloat. Let's delve into this conversation with Kelvin Emmanuel, Chief Executive Officer of Dairy Hills Limited, joins us also from our Abuja studio. Hi, Kelvin. Good morning. Thank you for your time.
Good morning. Thank you so much for having me.
Yeah, so I think the central bank considers an account that has not been active for about a year as dormant. But what does the law say about the treatment of it now that the CBN is asking that it be transferred to Unclaimed Balances Trust Fund?
Well, this is a very important question, and it's very, very clear in the BOFI Act, Banks and Other Financial Institutions Act that was amended in 2020 from 1993, Section 72, subsections 5 to 11 of the BOFI Act of 2020 states specifically that if an account is dormant for a period of 1 year, you're required to authorize signatories from the bank, to authorize signatories for the account to be reactivated. And it says in that guideline that if the account remains consistently dormant for a period of 10 years, then the bank or a specialized financial institution is obligated by law to publish a statement in 2 national dailies saying that the account is dormant and it's been dormant for a period of 10 years consecutively, and they're obligated by law, by the BOFI Act, to transfer it to the register of dormant accounts and into that unclaimed balances trust pool at the Central Bank of Nigeria. But here's where it gets interesting, because when you talk about these things, you always want to talk about it in comparison to global best practices. In the United Kingdom, in 2021, the House of Lords started out on a bill that will amend the Reclaim Fund, or the Dormant Assets Act of 2015. And before 2021, what they had done was, after 15 years, if there are unclaimed balances in banks and building society accounts in the UK, the accounts were transferred to the Bank of England, and it was distributed amongst good causes and community projects in the UK. But what they did in 2021, that was later now passed to the House of Commons in 2022 and then passed as the Dormant Assets Act of 2022, which was last year, was they said that, look, the UK government cannot use these unclaimed balances that goes into an unclaimed trust fund pool as government expenditure. Now, let me come back to Nigeria. In Nigeria, what they did in that circular is they said that after 10 years, no, in the UK it's 15 years. In Nigeria, they said they are going to use the unclaimed balances in that trust fund pool at the central bank to buy treasury bills, to fund government expenditure. In the UK, they say that you cannot use it to fund government expenditure. So it's always very important that when we discuss these issues, we situate it around global best practices. In the bid for the government to raise revenue, to fund budget, it's not aligning with global best practices. And one of the reasons why the banks are also fighting it is because typically, over the years, what has happened, if you speak to bankers, they'll tell you this, that these monies are typically used in on and off balance sheet trading treasury operations. So, of course, the banks put up a good fight, but alas, they lost when the BOFI Act was amended in 2020 and when the central bank came up recently to issue a circular on the guideline for the administration of these funds.
So interesting, especially because I also saw that, they want to use it for treasury bills and funding of the budget, especially at a time like this when we know that Nigeria does need an extra fund. But I guess the other thing that Nigerians will be talking about is the accountability that goes with that. Who is supposed to know how much this is at the end of the day, and exactly how much is put in the bonds and the treasury bills and all of that? Accountability is another question.
Yes. The question is of accountability is an important question because, if you look at the 2023 Appropriation Act, 29% of your budget is going into the sinking fund to refinance and pay existing loans. 31% is going into under recovery for PMS subsidy. You know, the issue about the removal of PMS subsidy and social investment program fund that is meant to ameliorate the impact has generated the uproar amongst Nigerians in conversations. And so that issue comes back to the governance and the administration of the budget and how the government is able to, you know, do the right thing. Like, I'll put it that way, because I'm not impressed with the way President Buhari over the last 8 years is leaving office next month has managed the budget, created the largest budget deficits, created the largest debt stock Nigeria has had, very huge budget deficits. In 2023, they have to borrow 7.5 trillion naira to fund the budget. How they are going to raise that money, I don't know, because all the sources, typical sources of raising monies, you have the Eurobonds market. The Eurobonds market right now is a no-go because Nigeria's credit rating is junk. A CA one that was issued by Moody's. No major institutional investor is going to touch Nigerian government bond, Eurobond. Or whether they're going to raise it from bilateral partners. You know, the China Exim Bank rejected Nigeria's application for a rolling debt stock of $22.8 billion from the 2018 medium-term expenditure framework. And then Ways and Means is a no-go also because there is an outstanding of $53 billion. So, you know, you looking at using this unclaimed balances trust pool that has nearly 2 trillion naira to be able to buy treasury bills to fund government expenditure. It does not align with global best practice, but again, Nigerians need to, at the end of the day, hold their National Assembly, because that's the place where they have a voice to speak to the National Assembly and ask them to hold the government to account on the administration of its consolidated revenue fund and on how these monies are used. For example, the $53 billion of Ways and Means, MPRO 18% plus 30%, 21%, is spending and is going to be one of the first issues the 10th Senate has to deal with when they resume in June. The Senate has asked CBN and Finance to provide accounts, audited accounts on how that money was used. They've not provided the accounts. So 74% of direct intervention programs that took 74% of that fund needs to be accounted for. So it's up to the Senate, for example, to make sure that they amend sections 38 to place a cap and require that the CBN comes back to the Senate to get a vote, a 2/3 majority vote for approval for that limit to be violated in the future. It's left to the Senate to ensure that the requests for audited statements and they get to the bottom of how these monies has been spent over the last 8 years to prevent future occurrence. So at the end of the day, Nigerians have a duty to write letters, to call, to ask for town halls, to engage their House of Rep members and their senators to ensure that they hold the executive to account on how these monies are spent.
Yeah, well, we at least the media, we start the conversation and hope that Nigerians will follow up. But I mean, Kevin, let's look at the other one. The other one is the profitability of banks. We said that the rates hike. You mentioned NPR went from 11.5% in April 2022 to about 18%. I mean, that was the last one. And this is affecting the profitability of banks. Now, some financial experts are saying that this could generally affect the running of the financial sector, and banks may be looking at cross-border services instead of, you know, domestic because of the threat to profitability.
Well, you know, this is a very, very interesting question. Looking at cross-border, you know, for example, you see Zenith and GT Bank, their audited statements for 2022. If you look at the books very well, you see that they wrote off about 124 billion naira because of their exposure to Ghana, to Ghanaian government bonds. The hits that they took from the restructuring of the Ghanaian government bonds. The government of Ghana defaulted on paying coupons on principal for creditors who held the Ghanaian government bonds. And two Nigerian banks, I think Access Bank is also exposed to it. They took about 124 billion and they had to, you know, do loan loss provisioning and some kind of write-off for it. You know, so if you want to look at the doing cross-border operations, you also have to consider the fact that anytime your country risk premium goes up and the ratings agencies step in and devalue the sovereign rating of the country, it affects the banks because your equity risk premium goes up along with your country risk premium. And the rating agencies will correspondingly also downgrade the ratings of these banks and reduce their asset quality, also increase the premium that they have to pay to be able to source money from the international markets and get credit lines. And also you have one issue that always goes into the assessment for both sovereign and corporate credit rating is the issue of currency risk, because you have your foreign currency issuer rating for these banks. So the question I have, because we don't have forward guidance on the exchange rate mechanism and management by the Central Bank of Nigeria, the question I have is, how are these banks going to hedge currency risk when it comes to the exchange of these currencies, maybe Zambia Kwacha or Ghanaian Cedi or South African Rand with the Nigerian Naira? At the end of the day, how do you ensure that your external risk of currency depreciation and devaluation is not higher than your internal rate of return? These are the questions that the Treasury and the management of these banks will be asking themselves when they consider cross-border operations.
All right, sir. So it's not like it's that much greener on the other side. There's still factors to be considered. Well, thank you so much for sharing your views with us this morning, Kevin Emmanuel, Chief Executive Officer of Dairy Hills Limited. Enjoy the rest of your day.
Thank you for having me.
All right, so now let's head to the market, the money markets. We talked today about the treasury and federal government bonds. Well, let's start with equities and see how that market closed yesterday. I guess that's already out. It closed in the red. I was kind of expectant that Transcore, with Mr. Tedola getting 5.5% of equities in Transcore, that will move the market. Remember when he got on Geregu also, that was a driving factor in the market for a bit, but it seems like Transcore's market cap is not that huge, to determine the market. But I mean, it didn't look so bad yesterday. 0.02% in the red, and looks like perhaps we're getting close to regain the 52,000. I don't know when that will happen, maybe at the close of trade today, hopefully. Looking at 51,944.58. We're still on 28 trillion naira for the market cap, so it doesn't look like we have much there, even though it's just 2.2%. The activity chart looks a little bit better than it did the day before because volume and value have made it to, at least value has regained. We see it at 2 billion naira, even though deals is still in the red. We have the sectors, even though I do know that the banking was bitten yesterday. A lot of buy interest. FBN Holding was down 0.9%. Zenith Bank was down. So that's why, when you see the giants, the figures down, you should expect that the counter will be in the red. Consumer goods made it marginally up there, 0.05%, as well as industrial goods. Insurance has been on a bull run. So, if it declined, then we shouldn't, talk a whole lot about it. Oil and gas undecided for yesterday. There you have the top trades. This is expected. Transcore has been in the news. I don't know when they'll run, but might be too late for investors to get on board with this now. Fidelity and UBA representing the most liquid counter. I don't know if we have Mr. Rotimi Fakaejo joining us now to give us a little bit of background of the market. Mr. Fakaejo, good morning. Thank you for your time. I was just hoping that the markets would at least close green yesterday because of the much activity that we've had on Transcore.
Well, I think you've said it all, that the market capitalization of Transcore is not that significant to have positively impacted the market, as it were. Though they have a huge shares in issue, but when compared to the market price presently, which is still below 2 naira, definitely we will not see that implied as much. For looking at the market from last week to now, we've seen that last week the market closed down by 2% at the end of the week. And so far this week, the market has gone down again by about 1.9%. And I think basically this may not be far-fetched by some of the results that are being delayed, which traditionally will have been released by now. The likes of GT Co, which normally has been the flagship of the Nigerian banking system. I think we are not seeing that kind of goodwill coming from them now, and there is a lot of work to do. So if this definitely can affect investors' confidence in the market, because everybody begins to wonder what is actually happening that is delaying the results of not just UBA, not just GTCO. UBA and Zenith have released their results, and I think for UBA it's quite heartwarming. For Zenith, there's a little disappointment. But for the other ones remaining, I think they need to do a lot of work to actually get it across to the market. I don't know whether it's the CBN that is delaying them, but I think there's much to do for them going forward in order for them not to have a situation like this again.
Yeah, obviously, because investor sentiment is very, very flexible, and any news can, tilt them one way or the other. So we do hope that they sort that out, in earnest. But yesterday we saw that May and Baker Ikeja Hotel, they were like the top losers of the day. Any particular driver, or the investors just wanted to sell off and make some money out of it?
Well, I don't think there is any particular situation in those two companies. It happens now and then, and we could even see them regain again by next week. But there isn't anything in the news which definitely has necessitated what happened. But I want to believe strongly that in every situation, in every trading day, we have losers. We have stocks on the losers chart as well as on the gainers chart. So it's normal, and there is really nothing spectacular that is driving the behavior of those stocks yesterday.
So seeing that we're really close yesterday, closing down 0.02%, very marginal. Do you think we would perhaps have the bull come out today at the close of trade?
It is unlikely because. For me, I still strongly believe that the Nigerian equity market is underpriced. But I think the appropriate time for right pricing is yet to come, and we're going to see it not too long from now. But be that as it may, Zenith Bank is really fantastic in the dividend payout they are doing. But at the same time, I believe investors are pricing that long before the result was released. So even whatever we may see now, definitely if there's going to be any positive movement, it's going to be after the stock had been marked down.
Okay. Then the Capital Market Committee, they've had their first meeting, and they've been talking a whole lot about, in fact, they said there's a revised master plan now, and innovations that is supposed to increase activity, attract new investors into the markets. But from a practical point of view, which is where you are coming from, how effective really are these suggestions and master plan? How effective are they to the everyday running of the markets?
Well, I think they'll be able to have some mileage improvement on the market with respect to the master plan. It has given some mileage improvement to the capital market. But I think for me, two things will drive the market so positively. Number one, the return of foreign portfolio investors into the market. And number two, upgrade of the of fintech in the activities of the Nigerian equity market. We are still very much lagging behind. And I think since we know that the youths don't really have time to be moving up and down, but to actually do a lot of things on their phone and on their laptop, we really need to bring them in to be able to at least harness the opportunities in the capital market. So I believe strongly that we need to pay a closer attention to upgrading the activities of the market vis-a-vis electronic transactions. And I think we really have to upgrade this. We have NIN, we have BVM. So there is really less need for us to be able to at least have a face-to-face have a physical interface with most of our clients before they can actually do transactions. So I think we need to look closely at this, and I believe that is going to help us a lot to actually improve the market.
All right, Mr. Rosimi Fakaija, thank you so much. That's a conversation that's been going on for a bit, and implementation, obviously, is what we are waiting for. Thank you for your time, and enjoy your weekend.
Thank you for having me.
All right, just before we head out of the market now, let's see what's happening in the fixed income space. We do know that the overnight lending rate was unchanged at 19%. System liquidity is still in a net short at 183 billion. Looking at the federal government bonds there, we saw that there were only 9 deals yesterday, and this is better than the other day, 4.87 billion naira worth. And April 2033 was the most appreciated. Treasury bills, imagine we had 37 deals on just one security. That's April 2024. So the bulk of what we had yesterday. 40 deals worth about 22 billion naira. Can we have the central bank there? Central bank, 7 deals worth 17.1 billion naira. And May 2023 was the most favored for the market yesterday. I think it's time to head to the other market now. Ladi is standing somewhere close by, ready to take over the board now. If we have Ladi, I don't know if it's still a greedy market for him. Bitcoin has been on a bull run, and that keeps Ladi happy. I don't know how much he really has there, or if he's just happy for his friends and viewers. I don't know how much you're making from this greed.
Yeah,
you know,
back to 68 points. We did fall to about 61 yesterday. You know,
yeah, but
showing
it's Friday. We should have a red market.
Yes, normally. That's the ritual.
But I mean, that seems to be changing. The narrative seems to have changed. But anyway, let me let you.
And let's see why it's changed.
Okay.
You know, this time. If we look at the price of Bitcoin and most of the top cryptocurrencies this Friday, we see Bitcoin going deeper into that 30K level, 2.32% up. That's what we're seeing. Quite a bullish run there. All eyes on that 31,800 resistance. That's a level we've not seen in a while. Hopefully it can break that, you know, going forward. But we see Ethereum now, the new kid in the block, breaking a new level, a psychological level, $2,000. They break that yesterday, and going deeper into that level there, $118 more into that 2,000 level, up 10%. Big jump there from that Chapella upgrade we got yesterday for the Ethereum network. And we see BNB not left out of the party. They're 5% up. And Cardano, 44 cents, 8.74%. But we're seeing price jump there. XRP, also staying above this 50-cent level, 6.57% up as what we're seeing. So it says mostly a green Friday we have today. Let's bring in Rume Ofi now, a financial market analyst. Hello, Rume.
Good morning, Ladi. Good morning.
Yeah, I expected to be excited, you know, with the kind of market we had, you know, this week. We've seen Bitcoin hit a new level and staying above it. Ethereum, the same thing there, 2,000 deeper, 2,118. How are you seeing it, and can this be sustained?
Ladi, this is a case of a calm before the storm. You can see, I think I have to repeat that again. This is a calm before the storm. You can see that both US and Europe are having issues with inflation here and there, and also the issues of possible recession, either a soft landing or a hard landing, is also being in the discussion for this year. China is also there, talking about China reopening, but you know, China has the debt sector and also property sector that is also having issues. You know, so but in all of this put together, I just see that this is going to be kind of temporary relief, but people should be very careful because there's this popular saying in finance that bulls make money, bears make money, pigs get slaughtered. I think that what I'm going to comment on that.
Yeah, definitely don't want to be a pig in this market right now, Ruben. But, you know, looking at all the headwinds we had in the first quarter, still, you know, Bitcoin was able to return over 80%, you know, in the first quarter. What are you seeing for the second quarter?
I don't want to sound like a prophet of doom here. You can see what the regulators are doing. For example, the CFTC requesting huge informations from all of these exchange platforms. For example, taking the case of the biggest cryptocurrency exchange platform in the world, which is Binance, signaling deeper investigation into their activities. Initially they said they violated their trading rules, but that is not to say for just the US alone. You can see Japan jumping on it, the UK jumping on it, and also Canada also saying that they will need certain information about the platform and its affiliates to provide them information of trading volumes, risk management procedures, and as well as compliant protocols. Also, the Thailand government and also Germany has also jumped on it. So my focus for going forward is that there's going to be a storm, although a lot of persons are not saying it. There's going to be storm because it is not sure exactly. It's just looking really good for now. But again, if you look at the Bitcoin dominance, you see that it's sitting at 44 now, 45. That is again to tell you that this is not a bull run. A lot of persons are going to disagree, but people always have this notion that history repeats itself, but it doesn't really occur directly most times. They only look closer for the fact that the Bitcoin dominance is moving higher and higher, and the price going up and up. It only suggests one thing. It means that the liquidity is going towards Bitcoin, which is not good. Ordinarily, for any bull run, when the market moves up at some point, there's a relief, there's a pause, then the cash flows into altcoins for altcoins to shine as well. But you're seeing this as a reverse situation. Bitcoin is just moving, and the odds are not really moving the way they ought to move. So that is one sector that people are not looking at. Then you saw Ethereum. After the upgrade, Shagai upgrade, even yesterday there was this report about $100 million liquidation. That is really massive on a daily, more like thrice that of Bitcoin. So the shots were removed, but that's not to say we're smiling all to a situation where we have the bull run for now.
And everyone trying to decide what happens with Ethereum's price, going forward, is it going to go up or down? But it seems to be holding up quite well in the short term. But thank you so much, Rume Ofi. We'll see what happens next week. Thank you.
I love to be the bear at this point in time. Yes. It's good to be alone.
Yeah, Rume the bear. Thank you so much, Rume. Thank you.
Thank you.
All right, so there you have it. It's a Friday. Market's looking good, but we have a bear in Rume bringing us back to reality at this point.
Exactly. Managing your expectation and your excitement.
Exactly.
Yeah, so you don't lose it.
Yeah.
All right, thank you so much, Ladi. We'll see you at 1:30.
See you.
For Business Incorporated. That's where we've gotten to all the program this week. I hope it's been worth your time. We'll promise to do better next week. All you have to do is join us. Please remember tomorrow, 7 p.m., Willie Bong will be here to give you capital markets, all the markets, a summary of everything we had this week and much more. That's 7 p.m. tomorrow. And Ladi Williams will see you at 1:30. I'm Ini John Michael. Have a great and a restful weekend.